Hey, what's going on, everyone? It's your boy Ryan Dins here, and I just wanted to talk a minute about the correction that's going on and what you should do. There's a lot of panic going on. Some people think it's a great buying opportunity. Some people think that the world's ending, they should sell. And I'm going to give you my take of what I think. In my opinion, I believe that when you can trust the market long term, like right now, I believe that the market is going to continue to go up in the long run, as it has for over 100 years. And I think that this dip is a great buying opportunity. The S&P's down, everything's down, the Dow's down, everything's down. Apple's a great buying opportunity. Apple was at 138 the other day. Right now, it's at 110. I bought some at 103 the other day at pre-market. It was like a real good opportunity to buy that. But there's just a lot of stocks that are down a lot. AT&T's down, and if you're like me and you are a long-term dividend investor, you should be buying right now, because the way that I look at it is this: as long as you are buying stocks that you can trust for the long term, O Realty, AT&T, Verizon, Apple, Microsoft, some of these companies, they're not going away. They're just getting beat down because everything's getting beat down, and that's what the market does. So do you really think Apple's never going to go back to 138? Because that's ridiculous. It'll probably be there in a couple months. So I look at it as a buying opportunity. I look at this as a gift. I'm like, this is a gift. Give me more stocks. Because unless something fundamentally changes with the company, or they cut the dividend, but total newbie traders, it's ridiculous what they do. They go, oh my god, the market's soaring, and then they start buying Tesla, they start buying Microsoft, they start buying all these things they don't know about, and they think it's just going to go up forever. But guess what? Stocks like Tesla, you can make a great amount of money, but if you don't know what you're doing and you think you can just jump on at the end of the wave and things are going to be fine, you just saw right now what happened. That's not the plan. What you should be doing is waiting for an opportunity like this, and that's when you buy. My portfolio's gone down like 7% in the last month, but do you think I care? I'm like, yeah, everything's 7% cheaper now because I only buy blue chip, non-risky. I buy dividend aristocrats and dividend kings and other stocks that have been paying dividends and increasing their dividends for years. As long as you see a company that made it through the crash of 2009 and made it through the recession and still increased their dividends through all of that, what makes you think that they're not going to be able to get through this? That's my main point here. When you see these stocks that have been increasing their dividends for 50 years and you go, oh my god, the market's down 10% right now, who cares? I want to buy now because it's going to go up 10%. It's just that simple. You buy the dips. There is a strategy that day traders use called momentum trading, where when you see something going up, you jump real quick and ride the wave. But that is for seasoned veterans. I see these people, they just open their account and they're immediately, all of them, going for the home run, going for these risky stocks. It's just, yes, some of you are going to win, but 90% of you are going to lose. And, with my strategy, you're going to win regardless. My strategy, for those of you who are new to the channel, it's very simple. I take a good portion of my income. I'd say right now, maybe I'm putting about 20 or 30% of my income into these stocks that are paying dividends. So, right now, every day that I'm alive, I get about 92 cents every day. And I've only been doing this for, maybe 4 months. So in another 8 months, I'm going to be making $3 a day. And you might say, oh, well, that's not a lot, but it keeps adding up. And then the next thing you know, you keep doing this for 10 years. Next thing you know, you're making $100 a day just on dividends. And then at that point, you're pretty close to retiring, or at least doing work that you want to do. I mean, most people, I'd say the vast majority of you watching this right now are at a job that you wish you didn't have to go to. Now, if you were making even 50 bucks in dividend payments, you could all of a sudden be like, okay, maybe I'll just do a side hustle. Or, maybe I'll just work weekends. All of a sudden, these dividends add up and your life's easier. So, I'm just starting this dividend thing. I used to be a day trader. I used to be a swing trader. I used to be much more aggressive trading in crypto. And sometimes you win, sometimes you lose. I've had days where I made $3,000 in a day. I've had days where I lost $2,000 in a day. But with this strategy, you're going to win long term. Put it this way, if I lose long term doing this strategy, it means America lost and everyone will be screwed. So when was the last time that everyone in America was screwed? That was the 1920s. It's been 100 years since something like that happened. And quite honestly, in the 1920s, the people who were buying ended up being rich in the 30s. So even then, it was a buying opportunity. So that's why I just think you gotta think about this long term. You don't, with my strategy, I won't be rich in 2 years, but I'll be rich in 10. So I'm patient enough to do that. I'm enjoying my life as it is. I just went on a beautiful vacation to the Hamptons. I went surfing. It's not like I'm struggling because I'm being cheap and putting my money away. I'm just smart. With that being said, I didn't buy a $600 hotel room in the Hamptons. I went off season and got a good deal online. I paid $130 to stay in a 5-star castle. Those are the things that you should be thinking about too. If you're thinking, how can I put the most money away? Just be smart. Get cheap flights if you want to go on vacation. Go in the off season. Get deals. Go to cheap countries if you want to travel. Just don't buy the most ridiculous things. I see friends of mine all the time. They'll go to Atlantic City or they'll go to Vegas and they'll buy some hotel suite for like, $700-800. They'll gamble, they'll lose $1,000. Be like, oh, whatever. I'd rather take that money, put it in a dividend investing account because I know that it's going to compound 10% a year. And the way that I look at it through compounding interest is every $100 that I save will be worth $1,000 in 30 years. So you have to look at it that way. You have to continue to save money, put your money in these dividend stocks, try to mentally prepare yourself for the fact that it's probably not going to do much the first 2-3 years, but then after a few years it starts compounding because the dividend payments you get, you reinvest into the stock, and it's just like a snowball effect. This is what the graph looks like for your growth when you do dividend. It goes like this, and then 3 years, 5 years, and then after 10 years it's just straight up. That's how compound interest works, and that is why I don't take these huge risks with these non-dividend stocks, these growth stocks that they might go up 50% in a few months, but then they might lose 20% in a day. I see it happen all the time. So if you're going to follow my strategy, buy these dips. Maybe put your money on hold when everyone else is buying crazed at the market, then wait till this happens, because it always happens. There's always dips, there's always corrections, there's always crashes, there always will be. We've been overdue for a while. I'm surprised it took this long. I knew that when COVID happened, this was going to happen, so I sold off my portfolio. I sold off like 90% of my stocks when I saw COVID happening. So I think I could have lost 10 grand if I didn't do it. Instead, I lost like 3 grand because I was smart. You got to notice what's happening. Human beings are easily, I hate to sound negative when I say this, but human beings for the most part are sheep. They follow what everyone else is doing. Don't follow what everyone else is doing. Create your own path, be conservative, and buy the dips. When everyone else is buying, you should be like, I don't know if I want to buy. But then when everyone else is selling, that's when you should be buying. That's why 10% of people are making all the money in the stock market, because everyone else just does what everyone else does. You got to time the market correctly, But with my strategy, it's not even about timing the market correctly. It's about consistently buying, knowing that the market will go up for the long term. All right. That is another wonderful episode for you, and continue to follow. Make sure you like my Instagram, ryan.dins on Instagram. Make sure you follow join my free Facebook group, which is we talk about dividend investing all day. It's free to join for now. So you'll see the link. Subscribe to the channel and continue to make money.